Okay, when we talk about investment goals, we're talking about a risk-reward trade-off, and we're talking about the risk tolerance of the individual that we're planning for. And what I mean by that is short-term, long-term, and medium-range goals all have a dollar value attached to them, and we need to assign the right investment strategy to that goal. If it's a long-term goal, let's say in 20 years you want to take a trip around the world, and you have a short-term goal of in 5 years you want to take a trip to Vegas. Well, we have the ability to invest for the long term for your trip around the world, so the investments will be different than those that we invest in for your short-term trip to Vegas. And those two goals compete with each other. So we have to formulate an investment strategy based on your investment criteria, based on your risk tolerance for those goals. As I said, your goals compete with each other. Now, there are some goals that, matter of fact, not some, all of your goals compete with each other. Most people who have children, they want to send those kids to college, but yet they need to retire. Well, the same dollar that you have has to be divided amongst those goals. So this area is the meat and potatoes of the financial plan. You really need to identify what you want to achieve in life. Like I said, what you want to achieve has a dollar figure attached to it. Hey, I want a new Harley. I want muscle cars. I want vacation homes. I want vacations. There's a dollar figure attached to all of those items. Everyone out there has something different that they want to achieve, or that they want to accomplish, or that they want to purchase. Everything costs money. That's just the vision of a financial planner, financial advisor. Whatever you say you want, we hear the cash register going off that's what it's going to cost. So it's our job to try to help you come up with the cash to achieve that goal. So money doesn't fall out the sky. So we have to prioritize those investment goals and start saving for those goals. Now, whether they're short-term, medium range, or long-term goals is going to determine whether you're going to have short-term investments, long-term investments, or sort of mid-term investments. And what that means is the amount of risk versus reward that we're able to take with those investment dollars. Now, the less risk that we take, the less reward. So the longer out we have to plan for this goal, the more risk we can take, the more potential return we may receive on that investment. And so, for instance, if you want to hypothetically go to Vegas in 3 years and, live it up. Well, what does live it up mean to you? Well, okay, let's call it $5,000 worth of live it up. Okay, well, 3 years is a short time from now. So we can't put those investment dollars into stocks, bonds, mutual funds that are geared towards long-term growth, because we need those dollars in 3 years. So